Currency markets are in flux, and that's true whether you're talking about the traditional FX market or the cryptocurrency space. Among the more noteworthy recent trends, the US dollar has soared in the wake of Trump's election victory, the Chinese yuan is getting a lot of attention following recent devaluation commentary, and of course, Bitcoin has punched through 100K and vacillated around that big round number while investors try to figure out what's coming next. Joining me to help make sense of the action is another all-new guest on the Money Show MoneyMasters Podcast. He's Blake Morrow, co-founder of Forex Analytix. Blake, thanks for joining me.
Hey, thanks for having me, Mike. I appreciate it.
Yeah, glad you could join me. A lot going on out there. So I guess since I haven't had you on the podcast previously, why don't you start by talking a little bit about your background in the FX business and what it is that you do there at Forex Analytix?
Sure. I'll try to make this brief. You know, I started trading in the late '90s, like a lot of people during the .com boom bust areas, if you recall, and I started trading independently at block trading back in 1997. Before that, I had got my Series 7, so back in 95. Anyway, I was part owner of a brokerage firm in Dallas. We eventually sold it. I was chief currency strategist for the Wise Trade Group, MB Trading, which eventually became Ally Financial. And then I started Forex Analytix about 8 years ago. And we provide analysis for individual investors, banks, hedge fund managers, institutions globally. We have a mobile app. We do analysis not just on currencies, but we have 30 different instruments. We cover cryptos. We cover Bitcoin quite aggressively. A lot of different cross rates in the currency market, buns, boons, the 10-year. Dollar index, S&Ps, DAX, you name it. We cover a lot of different instruments, but really, from our point of view, the currency market is the largest market in the world, and it's where a lot of correlations really develop and they start. And these trends, when they develop, they tend to impact every market around the world. So we obviously pay very close attention to what's happening with the dollar. It's very much going to be in focus the next 4 years during the President Trump's second term. I think he's got big plans for the dollar to move lower. And yet all of his policies that he's putting forward really don't really coincide with that. So you put all that together, and I think we're going to have a very, very volatile 2025 and beyond. And I think the dollar is going to be in the epicenter of the entire move.
Great. There's a lot to unpack there, and I definitely want to kind of go through those points one by one. But I first want to ask you, you've done a lot of work of trading yourself, obviously, and educating traders in the equities and FX space. You've had the show, The Morning Edge, and so on. So what are your thoughts on this trading and market environment versus what you may have seen, in previous years that you've been at this?
Well, volatility, I can just kind of backtrack pre-COVID. Pre-COVID, I traded for an independent fund where it was a private fund, and volatility, euro volatility was at 5, which is ridiculously low. It was a very, very tough environment, and I traded with them for 4.5 years, and it was great, but volatility was super low. Now, after following like the COVID lockdowns and everything else, volatility in currency markets really exploded. And what we've seen is a consistent incline in volatility as we're approaching, the 2025 calendar year. Yeah. One of the things that I think is really moving the markets, and one thing that will continue to move the markets moving into the next couple of years, is these divergent policies that central banks have. You have the Bank of Japan, which is desperately trying to raise rates. First time, they've come off the zero bound or negative rates in over a decade. And then you have other central banks like the Fed that's trying to lower rates where they probably really shouldn't be. And then you have other central banks like the ECB that's trying to aggressively lower rates because their manufacturing sector is completely slumping, and yet we all are facing persistent and annoying inflationary pressures globally. So this divergent central bank theme is going to continue to play out into next year as well. So I think those are going to be the dominating themes in the currency market, at least moving forward.
Okay, let's talk about the Chinese yuan situation I brought up in the intro. This kind of talk, they seem to be maybe trying to push back at tariffs by talking about allowing the currency to devalue. What are your thoughts on that?
Well, that's one of the levers that China has, and I'm sure your listeners are very well aware that the Chinese economy has been in the toilet, and China's done kind of a shotgun approach in stimulus, and
Yeah.
you can see obviously if you look at the China 50 or any Chinese index you want to benchmark, investors really want to see more of a bazooka from China. Now, one of their big levers that they have is manipulating, if you will, and I'm using that term rather loosely,
Yeah.
manipulating their pegged currency to the dollar. And one of the release valves that they have is, they can weaken the renminbi, weaken the yuan. And, a lot of people think that that is a next year story. China and my analysis, analyst team, excuse me, at Forex Analytix believe that China is going to be more of a let's wait and see what kind of tariffs come our way, and if it's something that needs to be dealt with through the means of the currency market, they will do that and they'll devalue their currency. I believe if you're looking at and I should pull up the chart really quick just so I don't reference the wrong exchange rate.
Sure.
You start seeing a move above 740 in the U.S. dollar CNH, and that means that China is really starting to weaken their currency and combat uh, tariffs or tariff threats, or maybe even a more substantial slowdown. They want to weaken their currency. They want to weaken their currency to pick up, demand globally for their exports.
Yeah. Let's talk about the Trump tariff and the sort of the dollar impact. Obviously, we've seen, USD take off after the election, kind of stabilizing a little bit now. What are your thoughts there longer term? I mean, on tariff policy, is this dollar rally going to last? Is it going to cause pushback here in the US?
Well, I believe. Well, first of all, I believe it's not a one size fits all scenario. When you're dealing with different, I was just having a conversation actually about 20 minutes ago with the Forex Analytics community about the ECB, and everybody just watched the Bank of Canada. They cut rates, basically front loaded a jumbo rate cut today, and the Canadian currency actually strengthened post Bank of Canada. And the reason why they did that is because everybody's like, oh, look, the Bank of Canada is going to cut rates, and they front loaded it, and now they're going to sit on the sidelines for a while. And a lot of people are worried that the ECB could do that tomorrow as well. They could actually cut rates by 50 basis points, which the market's not expecting, but say and we're going to stand pat. But you think about different countries and how they're dealing with President-elect Trump. It's going to be different, and tariffs are going to be different. You look at sterling or the pound currency. It has been very much insulated from the tariff threats. Why? Because sorry if you live in the UK, you guys just don't make a whole lot. Where you have a lot of European goods that are probably going to be tariffed quite aggressively. But that doesn't mean it's going to happen. I mean, I'm sure your listeners are very well aware. Trump's threats right now are just threats. They're going to get him to the table, and what he decides or his administration decides to do with each individual country, whether it's Mexico and they decide, hey, we want to work more aggressively on immigration and drugs and the cartel, so we're not going to tariff you as much. We'll let you get by with some of the automotive stuff that you're doing with China, blah blah blah. Maybe Canada is a little bit different as well, being that he just called Canada the great state of Canada yesterday. So you can see he's going to be approaching different countries differently, but the whole tariff threat, right now it's just a threat. What comes from it in 2025 is what's going to make 2025 interesting, not only in the currency market, but individual markets globally, whether, so it's going to affect you if you're trading the CAC 40 or the IBEX or the DAX.
Yeah. Yeah. Let me ask you about Bitcoin. I mean, obviously you've talked a little bit, I think, on X about this kind of range, 90 to 100K, and trading the range makes sense. Do you think we break out of that eventually? If so, or do you think this is more kind of a range bound environment?
I no, I do. I think it's been. I think it's well. First of all, if anybody who's been in our community for any number of last couple of years knew that the upside target for the big cup and handle technically was 103,000, and we 103,800. We suppressed it by like $200. We hit 104, and then we backed away. That a lot of this buying of crypto and Bitcoin and a lot of these altcoins has been all on anticipation of Trump coming back into office. He is, and I think he's going to be very crypto friendly. So I do believe longer term targets actually point to 130,000 from what I can see right now.
Yeah.
But I believe that you want to buy dips, and that's why it dips below 100,000. Yesterday it dipped to 94,000. And we were like, well, this is the place you want to be long. And then, we started scaling out again as it was approaching 100,000 this morning. And I think that's the approach that you need to take with crypto is you want to be a buyer on dips. It's going to be a friendly environment. I know there's a lot of people that believe that crypto is going to change the way that we all do business in the future, which it very well may. But I don't know about you guys. I do very little transactions in crypto that's outside of trading. So, and I do a couple, but I know the rest of the world doesn't. So, unless you're looking at it as a store of value, like a gold asset, yeah, well then, if you're looking at it like gold, well look at what gold's done. I think Bitcoins could mirror that too. So
yeah, and that's what I wanted to ask about. I mean, the one thing we hadn't talked about yet was precious metals, gold here. Obviously we blew out to that high, we've pulled back, seen some volatility. What are your thoughts there?
I love gold. I mean, what's not to love about a gold that's, I mean, what percentage did we put up this year? Like 18% or whatever the rally has been. I mean, in the gold market, when's the last time we've done that? And the trends are quite solid. The diversification and the purchasing of central banks purchasing a lot of gold has been substantial. When you're talking about China or India or other central banks that are putting away gold as reserves. So I like it. I just the biggest issue that I have is at this stage, and it has been for the last couple of months, is how probably poorly positioned it is from a institutional and even a retail point of view.
Yeah.
When you can easily go to down the street about a mile away from my home is a Costco, and I could go pick up a gold bar. It worries me because I know so many people that know nothing about the markets, and friends of mine, since I live in Scottsdale, Arizona. If you don't know that, people that I know that know nothing about the markets are, talking to me about gold, and they have been for the last couple months. And, when the shoe shine person is talking to you about stocks, it's the time you want to sell shoes. Maybe when your neighbors are talking to you about gold, it's probably the time that you want to be a little bit more cautious. So I believe buying in dips, but how far we go from here is I think we continue higher overall.
Okay. Let me pivot a little bit to tactics in the time we have left and sort of education facet of this. I mean, you talk on the website about 5 different ways of analysis: macro, candlestick, basic, technical, harmonic, and Elliott wave. Can you briefly discuss sort of how those fit into a trader's toolbox and kind of whether and how they can be mixed and matched?
Sure. We have a pretty how should I say, diverse staff here of analysts at Forex Analytix, and everybody's got their specialized analysis feature set, if you will. And for us, we like to look at multitudes and different types of analysis, whether it's having a macro theme backdrop behind what you're doing, maybe matching up with some sort of Elliott wave count or harmonic level that can show you when a asset class may pivot versus basic technical analysis, and kind of putting it all together. And it's like anything, as traders, what we do is we look for probabilities. So if you stack probabilities in your favor, and you're like, well, my Elliottician just saw this was completed 4 of 5, and it looks like it's about ready to head back up, and it's got a good macro backdrop, and the basic technical analysis says it's breaking out. Well, then your probabilities are stacked a little bit higher that trade's going to work in your favor going long. And that's the way we kind of view the markets, because not everybody gets it right. And, anybody that's been doing this for a substantial amount of time know that you're going to be right and you are going to be wrong. Yeah. And so if you can get most of the probabilities in your favor going in the direction that you want to be going, your probabilities are going to be better that you're going to make money. Your risk management is probably going to be a little bit easier. You're following an easier path of resistance when you trade. And that's kind of our philosophy at Forex Analytix.
Got it. One other question I want to ask is I know a lot of what you do is community-based, bouncing ideas off of other people and kind of getting their feedback. Any big questions you see popping up a lot and kind of mistakes people are making or tips you'd suggest to avoid that these days?
Yeah, that's actually a really phenomenal question. Mike, I've been working with, I got kind of thrown into the retail space back in the early 2000s when we sold our company to originally to the Wise Trade Group, which we had a brokerage firm and execution platform at that time in the late 90s, going into right after September 11th.
Yeah.
And so I got thrown into the, like I said, retail space. I started dealing with a lot of retail traders and I've seen people come and go, and I've seen people stick around for a long time. And what I find most problematic. Well, you asked me you asked me one question about like what's maybe what a lot of people are asking about.
Yeah.
There's a lot of interest obviously in crypto, but I think that's more, it's more based around what's happening in the current environment. But, as far as traders go and, some of the things I see traders do is I just see, for the most part, a lot of traders just have very poor risk management. Some of the best traders I've traded with over the years, when I was trading on an institutional size, is most of the guys would come with the same thought process: right idea, wrong time. That means they weren't opposed to getting out and taking a loss because it just wasn't the right time, but they'll still stick with the idea. They might just come back to it a day later, maybe a couple of days later. Because if you execute into a trade and you're like, I'm going to get long euros, or I'm going to get short equities, or whatever your trade is, a lot of people have this idea that, I'll just sit in it, stick in it for a while, and eventually go my way. But that's really the opposite of what I've seen some of the most successful traders do. They tend to say, you know what, I'm just going to cut my loss really, really small, and then I'm going to keep that idea fresh, and I'm going to come back to it, because it's just the wrong time, maybe right idea.
Got it. Last question I want to run by you. I mean, you're going to be joining us for the 2025 Money Show Traders Expo, Las Vegas in February. I know markets can change a lot, especially for our more trading-oriented speakers, but your current topic is intermarket trading in the new economy. Can you give people a sneak peek about, kind of what you're going to be talking about there, what they'll walk away from if they attend your session?
Yeah, first of all, I'm looking forward to being there. I'm going to be speaking with one of my colleagues, Tracy Shukart, and she's amazing. She deals a lot in commodities, and I deal in currencies. And like I mentioned earlier, I think the currency market is going to be the big central theme around what we're doing in the next year. And I think you're going to have to be watching the dollar very closely. And a lot of traders have seen correlations, and they think that correlations always stick. And the fact of the matter is they don't. But what we do is we see divergences and convergences from these correlations. And if the dollar is the central theme behind everything, then I think the dollar is going to tip you guys off as traders. It's going to tip you off on what might be happening in other markets. So I'm going to be using the dollar as like the base, called base currency. That's what us currency traders would call it. But really, the base thesis, your central point, if you will, and how it might spin off different trading opportunities just based on what the dollar is doing alone.
Got it. Well, listen, I really appreciate you taking some time out here to watch. And viewers, if you'd like to learn more from Blake, again, he's going to be speaking at that Money Show Traders Expo Las Vegas. It runs February 17th to 19th at the Paris, Las Vegas. You can find out more in the link below, find out more in the description below. Also click on the link if you want to register and subscribe to this channel if you want to get updates like these. So Blake, thanks again for joining the podcast. Look forward to seeing you there.
Well, thanks, Mike. And I look forward to seeing all of your attendees in my breakout session. See you guys there.
Awesome.